Hey everyone, and welcome back to another episode of Heavy Yields. In today's episode, we'll be taking a look at the world of stocks. Now, whether you're a beginner or a seasoned veteran, this video is perfect for you. In today's episode, we'll be taking a look at what stocks are, how to buy them, the difference between stocks and bonds, and how to earn money on stocks, plus a few other surprises too. But before we get started, please remember that this video is for educational purposes only and should not be used as financial advice. For financial advice, please always consult your financial professional. With that said, let's dive in and have a great episode. So, what is a stock? Well, a stock represents a small ownership of the company. When you buy a stock, you become a stockholder in that company and acquire a proportionate share of its assets and profits. Stocks are also commonly referred to as equities or shares. Buying a stock in this day and age is relatively simple. Long gone are the days where you have to ring someone up on the phone and place an order with your stockbroker. These days, you can all do it online relatively cheaply and relatively easily. First, you'll need to open a brokerage account with a reputable online brokerage platform in Australia or in whichever country in which you're watching this video. Now, there are several options available. In Australia, most of the big four banks have their own stock trading platforms. CommSec, for example, which is owned by the Commonwealth Bank, or Self Wealth, which is a low cost alternative. There are other options such as Robinhood and some other apps that you might have heard of in the media lately. Next, you want to fund your account and start researching the companies you're interested in. Australian stocks are traded on exchanges like the ASX 200, and there are many other stock exchanges around the world, such as Wall Street, which is the New York Stock Exchange, the London Stock Exchange over in the UK, and many others. Once you've found a stock you want to buy, simply place an order specifying the number of shares you'd like to purchase or the amount you would like to spend, and it should calculate the number of shares you can get for that amount. And then when you're ready, your broker will execute the trade on your behalf. A common question fresh investors have is, well, what's the difference between a stock and a bond? And the main difference lies in the way investors earn money. With stocks, you can make money through capital appreciation and dividends. Bonds, on the other hand, are debt instruments where companies or governments borrow money from investors. Bondholders receive regular interest payments, and the principal is repaid at maturity. Now, stocks are generally considered higher risk and have the potential for higher returns, while bonds are typically seen as lower risk with more stable returns. Now, I recently did a couple of videos on bonds explaining what they are and some of the risks involved with investing in bonds. So if you missed those, go back through the library and you can see a breakdown of them there. As I just touched on, there are two main ways you can make money through stocks. The first is capital appreciation. If the company performs well, the stock price may increase and you can sell your shares for a higher price than what you bought them, thus earning a profit and making money. The second is dividends. Now, some companies, not all of them, do often pay a portion of their profits out to shareholders in what's called a dividend. Dividends can be received as cash or additional stock and can be declared at any stage during the year. Very similarly to bonds, companies issue stocks to raise capital for various purposes, such as business expansion or research and development. In return, investors receive an ownership stake in the company. Now, stock prices are determined by the market, where buyers and sellers come together to determine the price of a stock based on supply and demand. Now, this happens every day on the ASX, for example, where people are looking to sell their shares, people are looking to buy the shares, and each side has to come to a mutually agreeable price before the transaction can take place. Now, there are two main types of stocks: common stock and preferred stock. Common stockholders have voting rights, allowing them to participate in corporate decisions. Now, an example of a corporate decision might be if the board wants to change an element of the company's constitution. They would typically have to seek a vote from shareholders at an annual general meeting, for example. Common stockholders also receive dividends or are eligible to receive dividends, but they are not guaranteed. Now, preferred stockholders have priority over common stockholders when it comes to dividend payments and any claim on the company's assets should the company go bankrupt and be liquidated, meaning all of its assets are sold off and the revenue that's generated from selling off those assets is paid out to debt holders and then to preferred stockholders first before any common stockholders get any money back. A downside to preferred stock, however, is that they typically don't have voting rights. And there you have it, guys. Just a quick introductory video to the basics of stocks. Now, stocks can be an exciting and profitable way to grow your wealth over time, but it's essential to understand the basics before you start investing. Remember to do your research, stay informed, and have a clear investment strategy before diving in. In the next episode, I'll be covering some risks of investing in stocks just to help everyone stay informed and make smarter financial decisions. So be sure to keep an eye out for that. If you found today's video helpful, please be sure to like, comment, subscribe, give me a follow to Heavy Yields for more financial tips and tricks. As always, guys, if you have any questions, please feel free to reach out to me on any of my social media channels and stay tuned for next week's episode. Take care, legends.